One of the things that made me so apprehensive about starting to invest was the thought that experts would have a massive upper hand, but this is not true. Do not give your money to a mutual fund manager. Do not listen to the so-called experts on Wall Street. Learn how to invest yourself and you can beat the market and you can beat the experts. So in this video, I'm going to explain the key advantages you have over experts. These being that you have an edge, you're more liquid, you're not trying to please investors all the time, and you can take more risk. So there's always something that a particular person is good at, or they love, or is their hobby. They have an edge over other people, and you should take advantage of this by investing in something that's related. Peter Lynch talks about this in his book, One Up on Wall Street, where he explains that the best place to start looking is close to home, in the shopping mall, or even better, at your workplace. He says the person with an edge is always in a position to outguess the person without an edge, who after all will be the last to learn about important changes in a given industry. Most experts diversify across hundreds of stocks. Like, how can they understand each one of those in and out? The answer is they don't. You're much better off investing in 2 or 3 companies that you really understand, and the best place to start is where your edge is. The point is, an expert can't have an edge in 100 different things. So if you focus on that one thing that you're good at, the chances are you're going to be better than these experts that are investing in hundreds of different things. And you'll likely know when the company's going to suddenly shoot up, or more importantly, you know when something is going wrong and you need to get out quickly. Okay, so say something does go wrong and you need to get out fast. You can do that because you have very little money in the market, so you aren't going to impact the price. When big funds with billions of dollars worth of assets want to sell, they're going to impact the amount of supply in the market, and that's going to shoot the price right down. And I think this is an issue that ARK is going to have going forwards. This is a company that has been really vocal about Tesla and has bought a lot of small companies. They own more than 10% share of those businesses. So if they were trying to sell one of those businesses, if 10% of that goes up for sale, it's going to be really hard to shift that without the price significantly dropping. The other thing that these big funds are constantly battling with is trying to please their investors. So every single quarter they have to show how they've done against the market. And if they didn't do very well, then the investors are just going to pull out their money. So to keep these investors happy and keep that investor base, to essentially keep their jobs, they just end up tracking the market by diversifying. And in this case, you might as well just buy an ETF instead of paying a fund manager lots of money to manage your money. So the real advantage here is you only need to please yourself. So if you have a bad year or a bad couple of years, it doesn't matter because you know that you're investing for the long term. And by investing for the long term, you can make much better gains. Lastly, and probably one of the biggest advantages you have when you start out investing, is you can afford to take more risk. The point is you have less money to lose, and if you lose that, it's not going to be that difficult to earn it back. Say you have £1,000 to invest and you put that into a high risk investment and you lose that. I mean, it will be pretty bad, but it's not impossible to earn it back. Whereas if you're investing billions of pounds, it is virtually impossible to earn that £1 billion back. So the point is, when you're starting out, you can afford to take more risk, and you want to, because £1,000 isn't really enough to live off when you retire, whereas £1 billion is. So you don't really need those incredible rates of return when you have that much money. So to close off, I'm just going to say, don't be scared to get investing because it's an expert's game. It is completely not, and you have serious advantages because you can focus on your strengths and not diversify, and then you can buy in and sell out really quickly in the market without having to deal with anyone but your own money, so you don't have to make anyone happy. And at the start, you can afford to take more risk. But just to be clear, I'm not saying go and take loads of risk. I'm not your financial advisor. All I'm saying is, it's a really great opportunity to start investing because you do have some advantages. Thanks a lot for watching, and see you soon for some more investment related content.